Hey everyone, welcome to the US Fast Track YouTube channel. Today we're going to be talking about basically cash flowing in the US. On the board here I've drawn up a property that one of the better returns I've seen advertised. We'll just go through it here. So I want to ask you, would you do this deal? I labeled it as a Florida property since majority I'm in Ontario and a lot of people love the Florida market. Let's just go through this deal. So purchase price $70,000. That's crazy. Can't get that anywhere in Canada. Some of the expenses on here is HOA condo fees, HOA homeowner association, a lot of gated communities. So $250 a month. It's one of the lower ones. I've seen higher ones. I've seen lower ones, but we'll say $250 per month. Property taxes, we'll say they're $1,200 for the year, so $100 right there. Insurance, $50. Property management, $50 for the month, which I think is low, but rent, trying to make this deal look nice here. Rent, $850 for the month. Monthly expenses are $450. So your year, after your net profit for the year would be $400 a month. It's $4,800 for the year. So your return on investment, if you bought this cash, 6.8%. Is that a good deal? First of all, there's a few factors that we left out here, which is going to affect your overall vacancy factor. I've never had a property, even ones that are minimum, that is a great area. There's usually some kind of turnover. Usually factor in at least 5%. But there's no, a lot of people that promote properties, they're not showing vacancy factors or repair factor. Even in a brand new 2006 condo or townhouse, or at some point renters go in there and they stay there for a year. Carpets get dirty, you got to stain clean. So always factor in something for that. Even in a newer paint, all that stuff costs money to repair. Also insurance. Certain areas you're going to want to get some premium insurance. Hurricane insurance, flood insurance, definitely going to be more than $50 a month. This is a mock-up, so I just kind of put together something that's easy numbers, but this is the type of stuff people are advertising. I asked myself, would I, do I get excited about this deal? And to me, it's 6.8% to 8% return. That's weak. It's not really giving me any motivation to say yes, let's jump into this market. But that's just me. To me, I like to see a 1 in front of that 16%. And I'll show you something that kind of what I like to see and what we've done in the past. I'll just kind of keep this. To me, I like to stay in the $45,000 to $55,000 range in property, and it is doable. And we're one of the biggest issues with a lot of, well, that deal was this HOA and condo fees. I hate condos for that reason. Those fees never usually go down. They usually just go up. So it eats up a lot of your cash. So, I like the single family homes, get into that market. Some of them have HOA fees, but they're just yearly and it might be just $300. So it's kind of, it's a minor expense. But just say we factor out that and we buy at $50,000. Property taxes we do, let's go same as before, $100 a month. Insurance, definitely we could do it for $50. I got some of my insurances under that. Property management, where we invest, it's usually 10%. So we'll go 85. Rent, we'll use the same because most of the properties they're usually around 800. We'll say 750 to 1,000 range that we kind of buy in. So your monthly expenses here would be, what we got here? We got would be 27 for the year. And minus that and that, your net. Make sure my numbers are right here. Okay, so now our year profit is 7,500 versus before was only 48, I believe. But since our purchase price is a lot cheaper, we're looking at 15%. Return on your money. That to me makes more sense. It's more sexy looking, and this is doable. These, this type of house, we're talking about a 3-bedroom, 2-bath in the suburbs. Property taxes are cheaper out in there versus in inner city areas. Houses are built in the late 80s, early 90s, late 90s too. We've even picked up properties in the 2000s, in year 2000 millennium. These to me are like your best bang for your buck. At some point, everyone, first-time homeowners, they're usually, instead of buying, they're usually renting in these areas, and it's like middle income. You're not going for the high end. There's deals even, we bought as low as $25,000, half of that, and renting at $900 plus per month. People say they don't like those markets. To me, there's bad tenants in any type of market, in the lower end, higher end, blah, blah, all messed up there. But it comes down to knowing your markets and moving forward on when you see an opportunity. To me, this makes more sense because, like I said, this factor here is gone. And at the end of the day, that eats up a lot of your money per month, and it just doesn't really make sense, especially in the markets where, like, you're not going down there for vacation and it's strictly like an investment. Then why, you don't need those sexy markets of like, oh, I need a beach nearby. Yeah, appreciation might kick in a little bit faster in those areas, but we're talking about like long term. By the time it really makes a difference in the market, you've already made so much money in the years piling up, so it doesn't really matter. This is just an example. Obviously, take a look at anything we offer. It's great, high performance. We're all about high cash flows, keeping more profits in our investors' pockets as well as ours. Take a look, subscribe to our YouTube channel, and thanks a lot. Hope to see you on the side.